Hey everybody, so on today's video I want to talk about health. I'm notoriously bad at actually looking after my own health. As you can probably tell by the big chubby cheeks, I look like I got stung by a bee. With the things going on in the world at the moment, it's hard to talk about stocks and crypto and things like that. So I'm going to change it up a little bit and talk about private health insurance in Ireland instead. The main point I want to get across in this video is that the longer you leave it getting your health insurance, the more expensive it is going to be for you. And that is obviously only for the people who can actually afford it in the first place. I'll throw up the stats here, but I think roughly around 50% of people in Ireland currently have private health insurance. I saw a pretty scary stat there recently. It was saying that there was 75,000 people on waiting lists for inpatient treatment in public hospitals. It's sad to say it, but you could potentially be putting yourself in a very hairy situation by not having any private health insurance. So up until about 2015, the private health insurance market in Ireland was kind of slowly dying. There was less and less people actually taking out private health insurance. That was probably a knock-on effect of the 2008 financial crash. People just didn't have the money to be spending it on health insurance. So they had to do something to try and fix it. They just had lots of older people who obviously would be leaning more heavily on the health system, signing up for private health insurance, and they didn't have as many young people to balance it out. So they developed this system called the lifetime community rating. So basically what this does, it adds loading onto your health insurance the later you actually take it out for the first time. So this was to try and incentivize younger people to actually take out health insurance. For every year older than the age of 34 that you take out health insurance for the first time, a 2% loading factor will be applied to your premiums. So this can get very expensive. Say if you take out health insurance for the first time at the age of 50, so you are about 16 years late, so you're going to have a loading factor there of 30% on top of your private health insurance. The highest loading factor that you can possibly have on your health insurance is 70%, and that would be for somebody who takes out health insurance for the first time at the age of 69. But let's say you were in a situation where back in your 20s you had private health insurance for like 5 years, and then you cancelled it and you didn't take it out again until you were 45. So you can use that 5 years that you had previously to offset against your lifetime community rating. So in that case you would only have to pay a loading factor for 6 years. So you're 45 less your 5 years that you already paid is 40 years of age, which is only 6 years over the 34 years of age limit. So that would mean you would have a loading factor of 12% in that case, instead of having a loading factor of something like 20 something percent. So there is a maximum time period for these loading charges. The maximum time period that you will be facing loading charges are 10 years. So if you, let's say for example, take out private health insurance at the age of 35 for the first time, you will have a 2% loading charge, and you will pay that 2% loading charge until you are 45, and then you won't pay any more loading charges after that. So there are a couple of circumstances where you will get exemptions that will further reduce your lifetime community rating. So I'm going to go through a couple of them here now. So the first one would be, let's say you had just moved to Ireland for the first time and you were 40 years of age, so you just immigrated to Ireland. Once you get private health insurance, within 9 months of you arriving, then you won't have to worry about any loading factors. And it's the same if you have emigrated to someplace else. So you've gone off to Australia for 10 years and you come back and you're 40 years of age, you will have 9 months to try and get your private health insurance to not have to worry about having loading charges applied to your health insurance. Another credit that can be applied to your lifetime community rating is if you spent time as a dependent where you're on somebody else's private health insurance. So this doesn't apply to anybody under the age of 18, so it's only if you're a dependent over the age of 18 and you're on somebody else's private health insurance. And lastly, if you had previously had health insurance for 3 years or more, you may be entitled to a credit of periods of up to 3 years for any time that you have been uninsured. I'll leave a link to a blog post below that go through all of these different exemptions below as well, if anybody wants to check them out. But yeah, that's pretty much my video for today. I would be interested to know if any of you actually take out private health insurance, especially people who are under the age of say 34. And would you avoid going out and getting private health insurance even if you knew that you were going to possibly face an extra 10 or 20% on top of the price in the future by by putting it off. So thanks very much for watching. Please make sure to subscribe to the channel if you enjoyed the video, and please drop a like on it as well. That would be a great help. Thanks very much again for watching. I'll see you guys in the next one.